It has been a wonderful week, exciting week, but why is it great? One of the news that we got is because of the Bitcoin ETF. Now, for some of you may be wondering, why is it special? Like, why is it important? Why is this great news? Bitcoin, we've been knew that it exists, and Grayscale, for them to win this recent court case, they already had their Bitcoin trust, which was following Bitcoin quite a bit. So are all the other trust stocks that they actually have, like Bitcoin Cash Trust, which I invest a lot in, Litecoin Cash Trust. It's already following the patterns of these crypto. But why is this one such a big deal? We're gonna take a look at it, but let's take a step back. What the heck is an ETF, right? So I'm gonna dive into what is an ETF for you. So let me pull this up right now. We're looking at Investopedia. I couldn't consider them to be trustworthy, right? So here, an exchange traded fund. That's what the ET and the F stands for. For those of you who are new to this whole space, it is a type of pooled investment security that holds multiple underlying assets rather than only one. It still is not as clean cut and straightforward. Pretty much the way you got to think about it is there's a bunch of stocks, crypto, and all these things. Currently, ETFs cannot hold on to crypto. They can hold on to different assets, but it's usually like stocks, bonds, and other types of securities, other mutual funds that they may hold, or even other ETFs that's combined inside of that one ETF, right? So you got to think about it in simpler terms. If I have my iPhone, I have a laptop, I have this piano, it's all together, it's worth something. If I trade this iPhone for a Galaxy or a Samsung phone, right, it's a different value nowadays, but the worth of it, the value of it can either go up or down. If all of a sudden the demand for Galaxies or Samsung phones starts going up, and I had traded this iPhone for that, then the total value of everything that I own now has increased. That's how you got to think about an ETF, right? It's like a pool of different investments and it creates one. Now, if somebody bought into that ETF when I had the iPhone, my MacBook, and something else, it was worth like $1,000, but all of a sudden now the Samsung phone is worth now an extra $300. Now the value of my ETF is now worth $1,300 because it has increased by another $300. That's exactly what happened in ETF. So they'll go in and buy like Tesla, for example, and price of Tesla go up. It would make the price of that ETF to go up. Now it's not a 1-to-1 ratio as if, right? Like an ETF price could be $50 per share, and then you see like Tesla stocks go up by like $100. You may be wondering, why is it that my ETF has not increased by that much per share? It's because it's a different math, right? It's a different calculation. So you may have like 4 shares of that ETF that equates to, if we consider $50 a piece and you have 4 shares, now it's worth $200. Yes, the price of Tesla has gone up, but they may only own like, a portion of it, right, inside of the purchase that they did. So therefore, it's not always going to be a 1-to-1 math ratio, right? It's not like it's going to go up by the same value as you would expect that the stock had went up to. It's not that way because they purchase it and they translate it to what they call shares so that you and I can purchase it directly, and they'll manage what they put inside of the investments per share, right? Because that $50 per share that they have, only let's say 5% of it may be part of Tesla, right? So let's use 10% actually as an easier number. Let's use 10%. So that's $5 that's allocated out of that $50 for the share to Tesla. So if Tesla went up by, let's say, 20%, right? That's how it's really calculated. So now the $5 would have gone up by 20%. 20% of $5 is $1. So therefore, the $5 worth that they originally had, it should have went to $6. So now my ETF should have went from $50, right? Because that was a total pie at first. And out of that $50 total pie, only $5 was allocated towards Tesla. And Tesla went up by 20%. So that $5 worth is now $6, which brings my increase of the ETF by also another $1 as well. So it brings the value to $51. That's pretty much how that math works. I hope it made sense for you in that aspect. So that's what it pretty much is. ETFs are traded throughout the day. That's the only difference between them and mutual funds. Mutual funds work the same way. They'll pull different investments together and create this one fund. But mutual funds, you can only purchase them. The transaction actually goes through at the end of the day. So at 12 p.m., market is open, right? Market is open from 9 a.m. to 4 p.m., 9:30 a.m. to 4 p.m. in Eastern Standard Times in the US. So within that time range, you can buy and sell whatever you want. If I purchase at 12 p.m. a mutual fund, they're going to look at the closing price at 4:30. Whatever that closing price is at 4:30 is what I'm going to be paying for. It's only traded at the end of the day. Versus an ETF, the price of it will fluctuate throughout the day. Like it's alive. So if the price went up by $5 and I purchased it at that price point, then that's a premium that I would pay. Versus a mutual fund, it's consolidated at the end of the day. So even if it went up and down throughout the day, no one can really, their transaction don't go through until the end of the day. Whatever that final closing price is exactly what you would be paying for at that point in time. Most of you, your retirement or linked to some mutual funds, if there are ETFs as well, I don't think in your retirement you're able to buy and sell quite like that, right? You have to do allocations inside of your retirement. That's why a lot of retirements are probably linked to mutual funds. But let's take further into ETFs, right? This is, again, an article from Investopedia. It has gotten a lot much more popular. We can see during the 2008 financial crisis, it actually lost a little bit of popularity, like everything else went down in value, and then a lot much more cash has been inputted inside of it. In 2008, I was just leaving high school, getting started with life, and we know a lot of recession started happening. Housing market was crashing by that point in time, but it went from $0.72 trillion to almost $10 trillion in 2021. I don't have a number for how much of it is allocated right now to today, but we can see it has been more than I would say 12x increase, right? From 2008 to 2021 over a 13-year period. And then that number is only increasing as we're speaking right now. The next thing I want to get into is the types of ETFs, right? So they call it passive and active ETFs. Just like with everything else, anything passive is hands off, it's doing its thing, it's automated. Anything active, I'm in it, I'm doing work, and I'm always like trying to see exactly what it is. That's why when you are labeled as an active investor, you're more like buying and selling constantly, or looking at the market and making decisions constantly. When you're passive, oh yeah, every week this amount of money goes in, or every month this amount of money goes in, or every day this amount of money goes in, and I don't care what happens. That's really passive, hands off, it's automated, and I'm just, waiting. That is probably one of the best investment strategies if you don't care about the stock market, don't want to drive yourself crazy. It's having that passive. You'll still make good money, you'll beat inflation, you'll be good over a long period of time, not for a specific short amount of time. So it's the same way. And we can see here, ETFs are generally characterized as either passive or actively. Passive ETFs aim to replicate the performance of a broader index, either a diversified index fund as the SP 500, so forth. And then actively managed ETF typically do not target index of securities, but rather have portfolio managers making decisions about which securities to include in the portfolio. That's all it is, right? Bond ETFs, you could buy that. Stocks ETF, exactly the label is the type of security investment that they have in it. Stock ETF will have stocks. Industry and tech sector, like if you in the technology fund ETFs, you can get those, or healthcare, tech funds, real estate, like all these different type commodities. You got to think about them as rice, electricity. That's all it is. Like, it's just a mix of different types of similar commodities that they group together, and they put those as the commodity ETFs. And then you got currency, which we have, right? USD, you can have Russia's, Canadian, all these things that they can come up with. So there's a bunch of types of ETFs out there that you can look into, that you have to do your own due diligence to see what you want to get into. I mainly have not done as much ETF. It's been mutual funds. There are two funds I mostly invest in. One is Ario Invest Funds. They have this technology fund, which I'm cool with, and Invesco has a technology fund. The symbol for the Ario is ARGFX. This is not me giving you financial advice. You got to do your own research and due diligence. I don't have any money in it now, but I made a good amount of chunk from that fund. I do want to buy back in, and plus it's black owned, so which is also a phenomenal thing. And then ITYAX is a mix of tech funds. It's been doing well. Right now it's down still, but it has an increase of 20% from its down low, from about under $40 a share to reaching over $48 a share as of this week, right? Those are two that I've invested in. ITYX, I actually do have some right now inside of a JP Morgan investment account that I pretty much open. Expenses, the only thing that you got to think about is if it's an actively managed ETF fund, it will be a little bit more expensive. They'll charge you more. Passively, you'll pay a smaller percentage fee. And you don't notice it nowadays. A lot of these brokerage firms, right, it doesn't seem like they're charging you anything at all. Like, it seems like how are they making money? But they actually are. They charge a small percentage either on the transaction or during the settlement. They have their ways, their own tactics of doing that. So if it's active, just know that you're likely to pay a little bit more on this. So let's just to summarize it up. Pros of having an ETF, right? You have access to many stocks. Like, I don't have to buy Tesla individually. I could just buy the share of the ETF, and I'm gonna be buying all these different companies all at once, right? Low expense ratio and fewer broker commissions. That is if it's more on the passive side. If it's active, you'll pay a little bit more. You still don't feel it as much, but you still will pay a little bit more. Risk management through diversification, just like mutual funds. And just like if you were to diversify buy different stocks as well, right? You're lowering your risk in case one stock just ends up crashing. Your whole portfolio isn't salvaged, right? It's not done for. And then it says ETFs exist that focus on targeted industries. You could invest by sectors. There's sectors-based ETF, bond ETFs, stock ETFs, and all these different things. You got to make your own choice when it comes to that. And then cons, as I mentioned, actively managed fund ETFs has higher fees, and single industry focused ETFs limit diversification, higher risk, right? And then lack of liquidity hinders transactions. I don't think that's a huge con. It's just, but it is something that's worth mentioning. But so to jump back into the whole Bitcoin thing, what exactly happened with Grayscale? Like, Grayscale has all these different funds available, right? So I'm gonna bring back an article here. This is from Winston. So in June 2022, the SEC had rejected Grayscale's application filed in October of 2021 to convert its spot Grayscale Bitcoin Trust into an ETF, stating in its decision that the proposal did not meet anti-fraud and investor protection standards. Big lawyer terms, big lawyer words. To me, that just sounds like bogus. I always say this. If you are invested into the word of God, reading the scriptures and everything, your spiritual self will start being fed, and you become much more awareness when people are feeding you BS, right? And this just feels like all BS from the SEC. That's my own opinion, of course, but I do feel that this is how I gain wisdom, is by reading the scriptures as much as possible. And just by looking at this does not make sense of why they're saying it did not meet anti-fraud or investor protection standards. Because what does, like, you know, as long as the brokerage is doing what it's supposed to do, like, anybody can steal whatever it is. It's again, it's a spot. It's not like they're buying the Bitcoin and you're holding on to it, which is people can crack into your wallet or whatever. That's not what this is, though, right? They're holding it accountable inside of their own corporation walls and making sure they're following all the laws of the SEC. But nothing is really safe. Nothing is really completely guaranteed at all in the investment world, right? You're still like, probably there's still a chance that someone can go in and hack your stuff and take your stuff. That's just there, right? But the risk is so low now because security has gotten so tight with financials firms and such. Like, when I tell you it's really tight, two-factor authentication and all that stuff, it's been really good, where it has lowered the ability for people to actually do that kind of stuff completely. But that's what the SEC ruled, right? So now they overturned it. They filed motion to fight against that. Grayscale has been doing that quite a bit. And Bitcoin Trust, let's just look at it right now. Bitcoin Trust, the price of it, GBTC. All All right, let's just look GBTC. See the fluctuation for the past year to date. It's up 125%, meaning it more than doubled in value. Right at the beginning of the year, it was at $8.20. Now it's at 18. So if you invested there, you make some good money. And look now, let's look at Bitcoin price, and it's showing. Let's do year to date. It went up by 55%. So Bitcoin Trust has done better than the Bitcoin itself. It is trying to follow it as much as possible, from 16,000 to 25,000. It has not doubled. It has not done as good. So it has done better in that sense. So you may be wondering, it's like, why do people need this ETF? Like, why can't they just do the trust completely? It's the exposure to a lot of retirement is one factor. I could say retirement accounts, institutional investors to access it, right? And the other thing is trust. People don't trust Bitcoin. They feel that it's vulnerable to security fraud and anti-theft and all this stuff. And I'm going to get into one article that I saw that really broke this down, right? The first group of people that were to file Bitcoin Trust, as we've seen here, is the Winklevoss brothers, right? They are crypto billionaires, Bitcoin billionaires, because they had so much of it back in the early 2000s, later 2010s, right? Early 2010s era and such, and they got rejected in 2018. Like they were the first to make a big deal about it, but they got rejected. And why did it take 5 years for that to happen? It's been a fight, but because of them, I think it helped bring the fourth ground for Grayscale to be able to fight this also. And Canada had much more success. Canada had Bitcoin in 2021, their BTCC and EBIT, and also this other one that's here as well. So we've seen progress. A lot of progress has been made towards bringing that world, but the United States have been very reluctant. I honestly feel, my opinion is because a lot of the grandfathers, the grandpops, the old folks, the people that have a lot of the cash, they haven't figured it out yet. And they haven't figured out to see if it's something that's worth investing, and they don't have a lot of their money inside of it yet. Because if they did, they would be all for it. Like a lot of these Congress laws and everything, they would be all for it. Like even in New York, there's a lot of things you cannot do to buy and sell some crypto. You're so limited because the laws aren't capable of doing that. And it's the only state, I believe, that has so much restrictions. I'm in New Jersey. I'm a New Jersey resident now and such. I don't have that restriction at all. I can buy and sell a lot of things. There are things that are bounded within the United States, the country itself, but for the most part, I do have a lot of capabilities and access to certain crypto that New Yorkers do not have. Where we are now is, as we can see, Grayscale wins the appeal of the SEC. This happened last week. It was such an amazing news. Now I explain to you why the ETFs work and how they operate, right? It's really because of those factors. And reading this article here, and I'm gonna go from the top, based on their feedback, why exactly they feel that this is gonna be a big deal. Besides unclear regulations around them, owning Bitcoin requires a Bitcoin wallet and trusting crypto exchanges, which are still uncharted territory for people unfamiliar with the space and require a certain level of self-education. That is so true. You cannot buy crypto at that easy. That's part of the reason I did not invest in it in 2013. You couldn't even access it. There weren't legal exchanges in the United States. You had to do some backdoor thing and get some certificate. I know one friend of mine who actually did. I worked with him and he owned 6. He did sell when it went to its peak of, I believe 15,000. He sold everything that he had. No, he had 10 of them. So he made a good pocket change. He paid a lot of taxes though, but he made a good pocket change off that transaction. Now, if it was much more open, a lot of us would have access to it back then, and we would have been able to purchase a lot much more. But it's still a little bit unclear in terms of how it's done, especially for those who are older. A lot of people that got, those billions stashing sometimes, and they're not up with the technology like that and everything. And this is all digital. This is very technology-oriented investment. You got to kind of be in it in a sense. Right, but there are exchanges that let you buy it. So Robinhood, you can purchase it directly on there, and I think E-Trade allowed for that. I'm not too sure completely, but there are certain exchanges that you typically trade stocks in that let you actually do that. Weibo is a newer exchange, and you could do both on there, right? So it's not as complicated as some may make it seem, but however, I cannot get it on Charles Schwab's, which holds a lot of assets, right? A lot of retirement accounts aren't exposed to Bitcoin as much. So, and they're not going to bring that forth into their portfolio because they haven't figured it out yet. So there's that trust factor that really comes in play into it. How does a Bitcoin ETF work? A Bitcoin ETF is managed by a firm that buys and holds the actual Bitcoin. So Grayscale will still have to buy it. The price is pegged to the Bitcoin held in the fund. So it should be like a close 1-to-1 correlation. Just like when we look at the S&P 500 and there's a S&P 500 ETF, they're very close alike, right? So let's just put that in right now, right? Look at the S&P 500. Year to date, we are 18%, right? We see the fluctuation. Now let's look at S&P 500 index. Year to date, where is the fund? It's probably not bringing it up. Vanguard fund. Let's look at the Vanguard fund, S&P 500 Vanguard fund. Google is probably not going to give it to me. It did not. VFIAX. Let me try to find that actually, because I forgot the symbol for it. All right. So it's up 18% too, right? They're very closely related. That's the whole purpose of having an ETF, is that you can closely follow a particular investment. And that's what this is hoping to replicate as well. The firm lists the ETF on a traditional stock exchange, right? You and I can go and purchase it. The investor trade the ETF just as you would any other stock. Bitcoin ETFs also offer new types of trading opportunities, including short selling, where investors can bet against the stock. So all the privileges that you would normally have with stocks, you have with the ETF, because it functions in very similar manner. I'm going to pass all this. So what's so special about Bitcoin ETF? A Bitcoin ETF in the US is expected to bring a new level of mainstream trustworthiness. I want you to pay attention to this: trustworthiness and acceptance to Bitcoin investing. The trust factor plays a huge game in everything, right? If there is a Bitcoin ETF, that means your retirement account administrator, they can probably pull that in as one of the new ETFs that is available to you to buy and sell inside of retirement. Now, I'm not sure they're going to do that because, you know, they may see that as an opportunity for us to build wealth a lot faster and everything. There's a lot of political that goes around, I feel, what's available inside of your retirement. That's why I'm grateful that I am self-employed and I have full access to what I can purchase inside of my retirement because I have a solo 401k. If you're not aware, a solo 401k is available if you're self-employed or independent contractor and you're receiving 1099 corporate, corp to corp income that you have to pay your own taxes. So therefore, you are responsible for how you allocate your income. And you can allocate a lot towards retirement so that way you can offset the amount of taxes that you got to pay. You not only have the employee side, which is capped at this year as of 2022. Let's just look at what it is. 401k limit is 20,500. 2023, 22,500. I'm sorry, I was correct. And the employer side as well, employer contribution limit 2023. That's what I should have put. 66,000 in total, right? So you could put 22,500 on the employee side, and the employee side you could put in the rest. The employee side has more complications to it. I'm not gonna get into it into this video. I have other videos where I break that down, but it's a percentage that you can put, but the limit you're capped at is 66,000 in total for both, right? You have that flexibility. I can purchase Bitcoin Cash Trust, Bitcoin Trust, Litecoin Trust, Ethereum Trust inside of my retirement right now. I have all those inside of my retirement. So I'm exposed completely to the crypto market thanks to Grayscale and thanks to the flexibility that I have for that retirement because I can self-manage it. So that's the benefits there. But I do feel that it's going to bring value and expose people to a different ways of investing. And institutional investors, they're going to want to play around with that. They want to be the first in because they're trying to make their clients as much money as possible as well. So I'm looking forward to really seeing how that evolves pretty much over time and everything. So, but that's pretty much it when it comes to this. That's why this thing is a big deal. It's really a factor of trustworthiness, being exposed to different portfolios now, because people cannot buy a lot of these grayscales and put it inside of their portfolios because there are regulations around that. But with an ETF, they can get exposed to it now at the same time. And it's going to open a whole bigger world, like I feel, when it comes to SEC laws and all these things, for people to tap into exposing their portfolio, their investments to the crypto world. So hope you found this insightful. If you have any questions, of course, drop it in the comments below. I would love if you give this a thumbs up. Share it if you found value in it with someone as well. Subscribe always for, whatever content I bring forth in the future, so that way we can stay in contact. And you can also email me. That's hustle@luxtreaux.com for any question. That's hustle@luxtreaux.com. I am on all the major social media platforms, so Facebook, Instagram, TikTok. I'm not on Twitter or X, but it's Luxtreaux Hustle with those handles, and you can find me on there for any questions if you want to directly, if you don't feel comfortable with email. So peace and love, and you can also check out the website hustle.luxtreaux.com. Trust in Jesus. Have an amazing one. I'll see y'all next time. Hustle, hustle.